Hi everyone, today we'll be going over accounts, February-March 2021, paper 3-2, question number 3. This is structured paper 3, which consists 6 questions, each of 25 marks, and we are also given a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes. And this question number 3 is a part of section A, which deals with financial accounting. Now, without any further delay, let's get started. T Limited has a financial year end of 31st December, and its total assets and total liabilities were as follows. So we are given the total assets for the year ended 31st December 2020 as well as 31st December 2019. All right. Then we are also given the equity of T Limited at 31st December 2019. And during the year ended 31st December 2020, the following transactions took place. So we are given the transactions regarding dividend, bonus issue, new issue of shares, and revaluation. Okay, now for the first part of this question, we need to prepare the statement of changes in equity for the year ended 31st December 2020, and we need to show the profit for the year as a balancing figure because above we do not have any information regarding profit for the year. Now the total column is also required. Alright, so we can see that equity consists of ordinary share capital, share premium, revaluation reserve, and retained earnings. So we need to prepare these columns along with a total column. Let's do that. Okay, so I'm going to start with the total column. Then the last one we had was retained earnings. Then we had revaluation reserve. We had our share premium. And the ordinary share. Okay, I'm just going to divide these columns. Whenever we're preparing a statement of changes in equity, we always start with the opening balances of all of our items. And we can see that our closing date is 31st December 2020. So the opening date is going to be 1st January 2020. So this is the balance at 1 January 2020. And let's have a look above at our information because we were given the equity section at 31st December 2019. And this will act as the opening balance for the year ended 31st December 2020, which means that basically these are the figures for the date of 1 January 2020. So we're just going to substitute these values. For ordinary share, we have 600,000. For share premium, we have 48,000. For revaluation reserve, we have 75,000. And for retained earnings, we have 162,400. Let's write down these values. For ordinary share, that's 600,000. For share premium, that was 48,000. For revaluation reserve, it's 75,000. And for retained earnings, it was 162,400. And we were also given the total above, so I'm just going to copy it rather than calculating it because that would be time consuming. And the total is 885,400. So let's substitute this value. That's 885,400. Now we were given a list of information or the transactions that took place during the year. The very first one was at 1st March, where a dividend of 0.16 per share was paid. So this is the dividend rate per share. And in order to figure out the total dividend value, we need to figure out the total number of shares. And we are given the total value of shares as well as the nominal rate. And in order to figure out the total number of shares, we just have to divide the total value by the nominal rate, right? And in this case, the total value is 600,000 and the nominal rate is 1, which gives the number of shares to be 600,000. Now, in order to figure out the total dividend, we just need to multiply the dividend rate per share to the number of shares. And in this case, we have the dividend rate of 0.16 per share. So we can just multiply it with the total number of shares of 600,000. And this gives the total dividend paid on 1st March to have the value of 96,000. All right, and remember that dividend is paid out of the profits earned, and profits earned are always added towards our retained earnings, which means that we need to subtract this value of 96,000 from the retained earnings column. Let's do that. So we have dividend paid, which amounted to 96,000. So we just need to subtract this from retained earnings column, and dividend does not affect any other items. So the total is also going to be negative 96,000. All right, now we can move towards the second transaction. It was on 1st April. A bonus issue of 1 share for every 10 ordinary shares held was made, and the directors keep the reserves in the most flexible form. And one thing to understand is that bonus issue is funded by the own company rather than cash inflows from any outside parties. So we will be funding the bonus issue by the share premium, and if this is not adequate, we move towards the retained earnings. Okay, let's figure out the total value of the bonus issue. We were told that for every 10 ordinary shares held, 1 new bonus share is issued. So, okay, I'm just going to calculate it right here. For every 10 ordinary share, we give out 1 bonus share. So for every 1 ordinary share, we give out 1 by 10 bonus shares, right? This is just the unitary method. And we know that we had the total of 600,000 ordinary shares, right? And we need to figure out the number of bonus shares corresponding to this value. So that is just going to be for 600,000 ordinary shares. We give out 600,000 divided by 10 bonus shares. So that is just going to be 60,000 bonus shares, right? And since we are funding the bonus share from our own reserves, bonus share is always issued at the nominal rate. It cannot be issued at a premium. And we were given our nominal rate to be $1, right? So we just need to multiply the number of bonus shares with our nominal rate. That would be 60,000 times 1, which again results in the value of 60,000. So the bonus issue has the value of 60,000. Let's write it down. Bonus issue. And bonus issue definitely increases the ordinary share by its value, right? So we just need to add 60,000 to ordinary share. And remember that bonus issue is funded by the share premium, right? So this 60,000 should be deducted from the share premium, but we can see that only 48,000 is present in the share premium. So for the total of 60,000, only 48,000 can be sustained by our share premium. So the remaining value will be sustained by the retained earnings. Let's figure out the remaining value. That is just the difference between the total value and the amount sustained by share premium. That's 60,000 minus 48,000, which results in the value of 12,000. So now 12,000 will be sustained by our retained earnings. Let's write it down. So 48,000 will just be transferred to the bonus issue. So we just need to subtract 48,000. So that 48,000 now goes towards ordinary share. And the remaining 12,000 is funded by retained earnings. So again, we need to subtract it so that this value of 12,000 is now added towards our ordinary share. Okay, so the total for bonus issue is always going to be 0 because 60,000 minus 48,000 minus 12,000 is 0, and these two values fund the ordinary share. Let's have a look at our third transaction. It is at the date of 1st October. 50,000 new shares were issued at 1.40 each. All shares were subscribed for and fully paid. We know that our nominal rate is 1, and we are issuing new shares at 1.40, which means that we are issuing it at a premium. So out of 1.50, $1 will be the nominal rate, which should be included in our ordinary share, whereas the remaining $0.40 will be the share premium, which should be included in our share premium. Let's figure out the value to be included in our ordinary share. We have our number of new shares to be 50,000, so we just multiply it with the nominal rate. That's 1, which gives our ordinary share value to be increased by 50,000. And then we have our share premium as well. Again, the number of shares is 50,000. We just need to multiply it with the share premium rate, which we figured out to be 0.40, which results in the share premium being increased by 20,000. And these are new shares, which means that the cash is being invested by outside parties. So this increases our ordinary share by 50,000 and our share premium by 20,000 without us having to deplete our reserves. Let's write it down. That is new issue of shares, which increased ordinary share by 50,000 and share premium by 20,000. and it does not affect revaluation reserve and retained earnings. So the total is just going to be 50,000 plus 20,000, which is 70,000. Now we can move towards our last transaction. We can see that on the date of 1st December, land included in property, plant and equipment was revalued upwards by 25,000. So whenever there is revalued upwards, the revaluation amount is to be included in our revaluation reserve. So we just have to include this 25,000 in revaluation reserve in our statement of changes in equity. So that's a revaluation with the value of 25,000, which we need to add in our revaluation reserve. And this gives the total to be 25,000 as well. Now the final thing that we need to include in our statement of changes in equity is the profit for the year, which will act as our balancing figure. So that's profit for the year. So now we can figure out the total. And this total will be the balance at the end of this year, which is at 31st December 2020. So the thing to remember here is that profit for the year affects the retained earnings section, right? But ordinary share premium and revaluation reserve is not changed by it at all, which means that we can easily figure out the total balance for these three columns. Let's do that. For ordinary share, it's going to be the sum of these three values, 600,000 plus 60,000 plus 50,000, which results in 710,000. For share premium, that's the sum of these three values, 48,000 minus 48,000 plus 20,000, which results in 20,000. And for revaluation reserve, that's the sum of these two values, 75,000 plus 25,000, which results in the value of 100,000. Okay, now for the profit for the year, we need to have some sort of idea about the total equity, right? And we can see that we are given the total assets and liabilities section for the year ended 31st December 2020, which means that we can easily figure out the total for the equity from this given value, because we know that in our statement of financial position, the equation we use is assets equals to equity plus liability. So in order to figure out the equity, we just need to subtract our liabilities from the total assets, right? In this case, we have our total assets to be 1,292,520. So we now need to subtract our liabilities, which is 341,400, which results in the total equity to have the value of 951,120. So this is the total of our statement of changes in equity. Let's write it down. So total is right here. That has the value of 951,120. Okay, now we can figure out the total for profit for the year, right? This acts as our balancing figure, and in order to figure it out, we just need to subtract these values from our total. In this case, that's 951,120 minus 885,400 plus 96,000, because two negatives make up a positive, right? And then minus 70,000 minus 25,000, which results in the total for profit for the year to be 66,720. And I already said before that profit for the year is only going to affect the retained earnings, which means that this value is the actual profit for the year. So we can write it down in our retained earnings column as well. Now we can easily figure out the total for retained earnings by adding these four values. That's 162,400 minus 96,000 minus 12,000 plus 66,720, which results in the total for retained earnings to have the value of 121,120. This concludes our statement of changes in equity as well as the first part of this question. We can now move towards the second one. We are given additional information. The following transactions took place during the year ended 31st December 2020. Additional machinery was purchased at the cost of 93,000. A motor vehicle was sold for 26,000. It had a net book value of 29,000 at the date of disposal, and interest paid and charged to the income statement amounted to 19,500. Let's have a look at our second question. We need to prepare a statement of cash flows for the year ended 31st December 2020 in accordance with IAS 7, and we need to use the space provided on the next page to show all of our workings. But in my case, I'm just going to scribble all over the question paper because that is just easier for me. But make sure you guys provide all of your workings in the particular box in your exam. Okay, let's write down the heading. That's statement of cash flows at 31st December 2020. Now, in accordance with IAS 7, statement of cash flows has three sections. The first one is cash flows from operating activities, second one is cash flows from investing activities, and the third one is cash flows from financing activities. Now I'm going to start with the operating activities. Okay, and we always start with profit from operations in our cash flows from operating activities. So that's profit from operations. Okay, in the above statement of changes in equity, we already figured out the profit for the year to be 66,720, right? But we require our profit from operations. And remember that profit for the year is just the difference between our profit from operations and finance charges, right? And we have our profit for the year to be 66,720. We require our profit from operations. And we were given additional information regarding finance charges right here. Remember that finance charges is just the interest charge, right? And we are told that interest paid and charged to the income statement amounted to 19,500. And this will be the finance charges, right? So I'm just going to subtract 19,500. Now our profit from operations is just going to be 66,720 plus 19,500, which results in the value to be 86,220. Let's start our cash flow with this amount. That's 86,220. Now the very first step would be to adjust all of our non-cash expenses that we included in the income statement in the cash flows, right? So the first one is depreciation, obviously. Remember that we subtract depreciation while figuring out the profit from operations. But depreciation does not include any cash flows, right? It is a non-cash expense. So we need to eliminate this. And in order to do so, we need to reverse this. Previously, it was subtracted. So now we need to add it back, right? So we are just going to add our depreciation charge for the year. Let's have a look above. We are told that additional machinery was purchased in this year. So this is of 93,000. And a motor vehicle was also sold, which had the net book value of 29,000. We need to remember this. Okay, now I am going to write down a statement in order to figure out the depreciation. We always start the statement with our opening net book value, which is the closing net book value of last year, which is 842,000, right? So I'm just going to write it down here. Then we just add all of our new purchases. And new purchases are to be recorded at its cost. And we had additional machinery purchased, right, at the cost of 93,000. So we need to add this cost. That's plus 93,000. Then the next step would be to subtract all of the disposals. And disposals are to be subtracted at its net book value. We were also told that a motor vehicle was disposed, which had the net book value of 29,000. So we have to subtract this value of 29,000 as well. That's minus 29,000. And the next step would be to subtract the depreciation charge for the year. We are trying to figure it out. And this gives the closing net book value, which in this case is the net book value at 31st December 2020, which amounts to 867,000. So now we can easily figure out depreciation. I'm just bringing this to this side and this amount to this side. So that's going to be 842,000 plus 93,000 minus 29,000 minus 867,000, which results in the depreciation charge for the year to be 64,000. So we need to add this 64,000 back to the profit from operations. Let's do that. So we're adding it. Now there was a disposal, right? So there might have been a profit on disposal or a loss on disposal. Let's figure it out. The sales value is 26,000, whereas the net book value is 29,000. Obviously, sales value is lower than the net book value, which means that there was a loss on disposal, right? And this loss on disposal is just the difference between net book value and sales value, which in this case is 29,000 minus 26,000, which results in the loss to be 3,000. And remember that this loss is again a non-cash expense because this is not really a cash loss. We do not have to lose any cash, right? And previously, when figuring out the profit from operations, we obviously subtracted the loss, but we need to reverse it now. So we are just going to add this 3,000 back to our cash flow statement. Let's do that. Loss on disposal. That's 3,000. Okay, so the first step is completed. We have adjusted all of our non-cash expenses that we included in the income statement to our cash flows. Now, the second step would be to compare all of our assets and liabilities, not all of them, but current liabilities and current assets with that of previous year in order to figure out whether there was an increment or decrement in those values. And remember, if we are talking about assets, the increment is cash outflow. So I'm just going to explain it through an example. If we are to purchase any new machinery, right? So that machinery purchase would definitely increase the value of machinery, right? But in order to purchase this machinery, we also have to pay the amount, which results in a cash outflow. So whenever there is an increment in assets, that results in a cash outflow. But if there is a decrement, that is an inflow in case of assets. But if we are talking about liabilities, the increment are always inflow. Again, I'm going to explain it via an example. Let's talk about bank loan. If we get a new bank loan, obviously our liability increases, right? And it also means that our cash comes into the business because we are taking a bank loan, right? But if there is a decrement in liability, that means it's an outflow. Okay, so we just need to remember this. And the rule for cash flows is basically we subtract all of the outflows. So outflows are subtracted and inflows are added. So while we look above at increments or decrements of assets and liabilities, if there is an increment for asset, we're going to subtract it. But if there is an increment for liabilities, we're going to add it. This is basically the rule for cash flows. Now let's compare the values. Okay, let's start with inventory. We can see that currently for this year we have the value of 126,000, whereas previously we had the value of 111,000, which means that there is an increment. Let's figure out the increment amount. That is just the difference, 126,000 minus 111,000, which results in the value of 15,000. So inventories are being increased by 15,000. Let's record this. Increase in inventories. And inventories are assets. An increment results in outflow, which is a negative. So we're just going to subtract the value of 15,000. Now let's have a look at another asset. We have our trade receivables. For this year, its value is 299,520. Previously, it had the value of 254,400. Again, there is an increase. Let's figure out its value. That's 299,520 minus 254,400. Which results in the increment in trade receivables to have the value of 45,120. Let's record this. That's increase in trade receivables. And trade receivables is an asset. Since this is an increment, we need to subtract the value of 45,120. Okay. The next asset we have is cash and cash equivalents, which is not to be included since we are preparing the cash flow statement, right? And next one is 8% debenture, but this is a non-current liability. So we do not include this. We only include current liabilities, which is given to be trade payables. And we can see that for this year, it has a value of 179,400, whereas previously it had the value of 171,000. So there is an increment. Let's figure out its value. So that's 179,400 minus 171,000. Which results in the increment in trade payables to have the value of 8,400. Let's write it down. So that's increase in trade payables. And increment in liabilities means cash inflow, so we need to add the amount. And we calculated the amount to be 8,400. Okay, so we adjusted all of the increments or decrements in our current assets as well as our current liabilities, which means that now we can get our cash from operations. And this is going to be the sum of these six amounts. That's 86,220 plus 64,000 plus 3,000 minus 15,000 minus 45,120 plus 8,400, which results in the value of 101,500. Now, the next step would be to adjust all of our interest and tax paid. And remember that we are given no information regarding taxes, so we only include the interest payments. And right here, we're told that interest paid, which means that we paid out this in cash. So that's a cash outflow, right? We need to subtract that. So it amounted to 19,500. Let's subtract this amount. That's 19,500. And this results in the total net cash from operating activities. That is just going to be the sum of these two amounts, 101,500 minus 19,500, which results in the net cash from operating activities to be 82,000. And this concludes the first section of our cash flow. So now we can move towards cash flows from investing activities. And remember that investing activities deals with purchases and sales of non-current assets, and its information was given above. So we know that additional machinery was purchased. Like I said before, whenever we purchase new machinery, we need to pay cash. So we definitely paid out 93,000. It's a cash outflow. We need to subtract this. Let's write it down. Purchase of machinery. And for this, we paid out 93,000. And we were also given disposals. Right here, we're told that a motor vehicle was sold for 26,000, which means that we received this amount of 26,000 for selling the motor vehicle. So this is cash inflow, which should be added in our cash flow. Let's write it down. So that's sale of motor vehicles. Which amounted to 26,000. And this concludes our investing activities section, which means that we can now figure out the net cash from investing activities. And this is the sum of these two values, minus 93,000 plus 26,000, which results in the negative value of 67,000. Okay, this concludes our second section. So now we can move towards the final section, which deals with financial activities. So that's cash flow from financing activities. And financing activities section deals with our equity and non-current liabilities. So let's have a look above. Right here, we can see that we issued new shares, right? And those new shares amounted to 70,000, which means that these 70,000 were paid by investors of outside parties to our company. So this is definitely a cash inflow, right? Inflow should be added. So we need to add this value of 70,000 in our cash flow statement. Let's do that. New issue of shares amounting to 70,000. All right. Then we also know that we paid out dividend to those outside investors. So this is a cash outflow for our company, which means that this 96,000 should be subtracted in our cash flow statement. Let's do that. That is dividend paid of 96,000. Okay. Now, let's see if there is anything related to our non-current liabilities. Right here, we can see that there is 8% debenture, which is our non-current liability. And this year, it has value of 120,000, whereas previously, it had the value of 200,000. So what we can say is that the difference was paid during the year. Let's figure out the difference. That's 200,000 minus 120,000, which results in 80,000. And this just means that we paid out 80,000 of our debenture in this particular year. This is a payment which is cash outflow, so this should be subtracted in our cash flow statement. Let's do that. So we can write it down as repayment of debenture, which amounts to 80,000. And this concludes all of the activities in our financing section. So we can figure out the net cash from financing activities. This is just going to be the sum of these three items. So that's 70,000 minus 96,000 minus 80,000, which results in the negative balance of 106,000. Okay, this concludes all three sections. So now we figure out whether there was a net increase or decrease in cash and cash equivalents by adding the total net cash from operating activities, investing activities, as well as financing activities. In this case, that is 82,000 minus 67,000 minus 106,000, which results in a negative balance of 91,000. So what we can say is that there was a net decrease in cash and cash equivalents. Now the next step would be to add our opening cash and cash equivalents. So that's opening balance of cash and cash equivalents. And this will give our closing cash and cash equivalents. Let's have a look above to figure out our opening cash balance. Okay, right here we can see our cash and cash equivalents, and opening would be for 31st December 2019, which amounted to 49,000. Let's write it down. That's 49,000. Now the closing balance is just the sum of the net decrease and our opening balance, which is minus 91,000 plus 49,000, which is also negative 42,000. Okay, and this concludes our cash flow statement. Now in order to check whether our cash flow statement was correct or not, we can just look for this value in our this year's liability because it's a negative, so that would be a bank overdraft, and it's given right here. The bank overdraft amounts to 42,000, which means that our statement of cash flow is correct. So this concludes the second part of this question. Now we can move towards the third one. We were given the working section, so you guys should be showing all of the workings in this particular box rather than scribbling all over the question paper like I did. Now for the third question, we need to assess the impact of the payment of the dividend and the partial repayment of the debenture on the cash and cash equivalents at 31st December 2020 of T Limited. Okay, since we are to assess the impact of the payment of dividend, let's figure out the cash and cash equivalents balance if we were to exclude the payment of dividend and the partial repayment of debenture. So cash and cash equivalents at 31st December 2020 of T Limited after excluding payment of dividend and partial repayment of the debenture. Let's calculate it. So let's refer to our cash flow statement. That is going to be 82,000 resulting from net operating activities, negative 67,000 from investing, and from financing activities we're going to exclude these two, so that's only going to be positive 70,000. Let's calculate it. That's 82,000 minus 67,000 plus 70,000, which results in the positive balance of 85,000. So we can see that if we are to exclude the payment of dividend and the partial repayment of debenture, T Limited would have gotten a positive cash and cash equivalents at the year end. So let's write it down as well. Both the repayment of debenture and payment of dividend make T Limited turn from a positive cash position to a negative cash position. Now let's look at the amount of dividend and debenture. We can see that dividend payment requires 96,000, whereas repayment of debenture requires 80,000, and we know that we have a positive cash balance of 85,000 excluding these two, and 85,000 can definitely sustain the repayment of debenture of 80,000 but cannot sustain the dividend payment of 96,000, right? So what we can say is that T Limited will still have a positive cash position if only debenture but not dividend is paid. Let's write it down. T Limited is still in a positive cash position if only debenture but not dividend is paid. And if we are paying debenture early, then it means that we can save interest because debenture definitely requires interest charges, right? So early repayment of debenture can save interest. Okay, let's look at the time frame of our debenture. Okay, we can see that debenture needs to be repaid during the year 2024 and 25, but we are already repaying 80,000 of it in the year 2020. So what we can say is that repayment of this debenture can be deferred as the maturity date is in 2024 to 25. Let's write it down. Repayment of debenture can be deferred as the maturity date is in 2024 to 25. Okay, this concludes the third part of this question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.